The freighter Pacific Horizon veers off its intended path near Dalian Harbor. On board, the sailors observe loading cranes halting abruptly. A news bulletin from Reuters buzzes on commodity traders' devices in Chicago. China has abruptly terminated all purchases of American soybeans, nullifying agreements worth $45 billion in flash. That same day, U.S. Treasury Secretary Scott Bessent rushes into a meeting armed with figures that shock even seasoned experts. China hasn't merely halted agricultural buys. It's also imposed stricter controls on exporting lithium carbonate, a critical resource for the American electric vehicle battery sector. In Chicago's trading pits, soybean prices plummet 6% in one trading day, marking the sharpest decline since 2018. Iowa growers stare at their monitors as profits evaporate. A terse note spreads via exporter chat groups. China has wiped out the demand. Bessent addresses the media later that day, labeling China's actions as economic pressure tactics. Privately, however, his team concedes the response was foreseeable. For the past 2 years, the U.S. has ramped up duties on Chinese electric cars, semiconductors, and renewable energy equipment. Now, Beijing is targeting U.S. vulnerabilities in agriculture and battery materials. According to Bloomberg's commodity reports, U.S. farm shipments to China dropped 39% in the first 6 months of 2025, while China's soybean acquisitions from Brazil jumped 44%. The data underscores a shift. The globe's biggest economy is weaning itself off American produce. In Des Moines, the atmosphere carries hints of fuel and damp harvests. Storage facilities overflow, but deals are scarce. Historical figures from Reuters indicate China previously imported over 32 million tons of U.S. soybeans each year. This cycle, none. Regional buyers reject incoming loads, forcing producers to slash rates to clear inventory before spoilage. Simultaneously, a joint analysis from Bloomberg and another source highlights China's command over lithium processing and battery component manufacturing, surpassing 80% of worldwide output. Even domestically extracted lithium in the U.S. often requires Chinese refinement. The reliance is absolute. Within Trump's advisory group, calls for countermeasures grow. Bessent advocates caution, noting that tariffs erode U.S. bargaining power. In a private session transcript leaked to a major financial outlet, he remarks, "We've engineered a conflict we can't sustain or energize." The statement spreads rapidly online. Markets view China's restrictions not as mere reprisal, but as strategic adjustment. By halting soybean imports, a staple of U.S. heartland economies, and limiting lithium access, the backbone of modern transport, Beijing strikes at America's heritage and innovation. A leading financial publication notes that China's National Grain Authority has shifted deals to Brazil's public export entity, securing supplies into 2026. In exchange, Brazil consents to payments in yuan, sidestepping the U.S. dollar. The deal's scale, $23 billion. On the lithium front, a prominent Chinese firm has expanded its output in a key region, backed by subsidized financing and energy rates far below those in U.S. states like Nevada. Industry observers deem it an insurmountable edge. In Iowa's financial institutions, lending halts. The USDA's summer projections estimate farm borrowing hitting $600 billion this year, a record driven by elevated borrowing costs. With sales vanishing, assets depreciate rapidly. Haulers sit unused at fuel production sites. Builders halt warehouse expansions. The ripple effects cascade. A major equipment maker reduces output by 20%. In Nevada's arid mining areas, earth movers shape the landscape. The Energy Department has invested a minority stake in a lithium project, collaborating with an auto giant via a $2.26 billion funding initiative. Leaders tout it as self-reliance in resources. Yet, cost comparisons reveal Chinese facilities handle lithium at 30 to 40% lower expense than American ones. Bessent's subsequent report to the president details decoupling's toll. Short-term subsidies might bolster farm earnings, but they erode enduring markets. A business journal estimates each $1 billion in forfeited Chinese sales eliminates 10,000 countryside positions. Relief packages amount to $20 billion, yet true demand can't be fabricated. China portrays its soybean avoidance as a measure for supply stability. An official commerce declaration states, "We will emphasize varied sourcing to minimize foreign reliance." Beneath the formal language lurks influence in global affairs. This development caught many off guard. It arrived sooner than anticipated. The escalating tensions aim to bring back manufacturing, not isolate key sectors. The agricultural downturn and mineral shortages now intersect, exposing unresolved dependencies. Midway through the year, Bloomberg documents increased Chinese funding in Argentina's prime lithium zones, securing 25% of upcoming yields. Another report adds that Chile, a traditional U.S. ally in extraction, has inked pacts with a Chinese enterprise, marginalizing American firms. To compete on supply, the U.S. would need massive investments in processing facilities, endeavors spanning 5 to 7 years. China established its infrastructure decades earlier. In the central U.S., frustration turns operational. River transport firms note a 40% reduction in crop shipments from the prior year. Holding expenses climb. Some operators divert surplus to alternative fuels at deficits. Perishables don't hoard well, a cooperative leader shares with news sources. In contrast, a Chinese auto leader highlights its internal battery unit outpacing a major U.S. facility's annual production quarterly. The disparity widens. The administration initiates an assessment of earlier trade accords China disregarded years ago. Besant cautions that imposing by mandates could provoke further escalations, like curbs on rare earth elements, 90% of which the U.S. sources from China. Nonetheless, actions proceed. Soybeans evolve into diplomatic spectacle. Lithium sparks urgent concerns. By fall, a financial news source verifies new Chinese oversight on graphite exports, vital for energy storage, impacting U.S. vehicle makers. Two prominent automakers postpone product rollouts discreetly. Indicators now illustrate intertwined challenges. Soybean values dip under $9 per unit, a 5-year low. American battery producers lag Chinese rivals by 35% in expenses. The cycle is evident. One sanction sparks cross-industry responses. A tech levy halts food flows. Mining incentives prompt processing bottlenecks. Isolated actions falter. In early autumn, a restricted Treasury document forecast that sustained Chinese curbs on soybeans and lithium for a year could shave 0.8% off U.S. economic growth, about $200 billion in foregone production. It notes somberly, even immediate resumption wouldn't reverse China's permanent shift to alternatives like Brazil, Argentina, and Russia. Russia's eastern territories have allocated vast lands to Chinese farming operations. Per earlier reports, Beijing's resource strategy, once conceptual, is now operational. At a media session, Besant strives for composure. This is an opportunity for construction, not accusation. His delivery wavers. A prominent journal titles its piece, Besant's Battle with Beijing. Tensions go global. Pundits question his ability to manage dual pressures in farming and resources without eroding market trust. Bond rates climb, producers rally, and car companies seek guidance. In Chinese media, U.S. claims are dismissed as echoes from a waning influence. As time passes, U.S. responses falter. Aid softens farmer blows but swells national debt. Duties inflate local prices. The dollar's primacy erodes subtly as Brazil-China deals settle in yuan for a full period. Besant allegedly advises the president that deeper tariff use might prompt China to exploit patience, allowing gradual economic drain until concessions emerge. By late fall, inconsistencies intensify. U.S. extraction sites advance, yet lack refining outlets. Growers harvest without buyers. Exports stall on one end, imports choke on the other. China unveils a collaborative stockpile of key materials with allied nations. commanding over 70% of lithium processing and 60% of soybean trade globally. One evening, Besant exits his office in a light rain. An assistant passes a sealed dossier on resource and farm linkages. A loan analyst note inside reads, "The nation that halted our crop sustenance now drives our energy tech." He remains silent, pockets the document, glances at the government landmark, and departs. A news agency headlines, "China intensifies rare earth oversight as U.S. support legislation lags." Investors term it an inescapable trap. Separation sans substitutes. Rural areas see it as disloyalty. Shortly after, China's trade office issues a late-night advisory, initially overlooked. Fresh approvals for lithium compounds, graphite, and specialty metals demand security vetting. In an urgent discussion with industry leaders, Besant admits vulnerabilities. Per financial reporting, U.S. lithium stockpiles suffice for mere weeks of factory needs. Data also shows 2/3 of battery inflows route through Chinese hubs despite barriers, implying minor holdups could halt operations across states swiftly. Concurrently, regional Bloomberg coverage affirms Brazil's financial authority endorsing yuan-based crop transactions, the hemisphere's pioneer. Within days, the dollar's portion in those bilateral exchanges dips below 45% historically. Experts label it a monetary shift masked as commerce ease. A confidential global finance watchdog brief warns of further 25% drops in U.S. farm outflows to China by next year if trends persist, cautioning that coordinated resource blocks could erode American influence in essentials. As a columnist observes, America has ceded control over sustenance and power sources concurrently. The phrase echoes widely, encapsulating strategic erosion unfolding live. Globally, observers note a leading nation divided between tradition and progress, one grasping agriculture, the other energy, both constrained by the adversary it sought to marginalize. The core issue shifts from victory in disputes to sustaining domestic nutrition and machinery absent the partner that severed ties.